Good evening and welcome to Your Money, Your Call. I'm Mark McCarthy. It's Thursday night and as usual we are talking shares. Joining me on the panel tonight are the two analysts with the most mispronounced names in the market. One is Capolingua from the Australian Stock Report and Simon Gozowski from Investment Partners, and I hope I've got those both right.
Close enough.
Close enough? Okay. All right, if you have a question about shares, our phone lines are now open and we'd love to have a chat to you. Please give us a call on 1300 30 34 35. Or if you prefer, you can email us at yourmoney@skynews.com.au. Welcome to the program. Well, gents, despite, I guess, a mixed season report so far, probably better than many were expecting, stock markets are not really doing too much. We've seen it bounce around that sort of 5,400 level. In this sort of times, Carl, I think a lot of people turn to the technicals to sort of gauge where the market might be heading next. What are the charts telling you?
Yeah, absolutely, and it's a really crucial point in time from a technical perspective. We have had a fantastic run over the last month or so since that sort of late January, early February dip. We're up about 7.5%, 8% from those highs, and that rally took us back to really where we were just a couple of months before that. So overall, we sit within a sort of a broad basing pattern, a trading range between about 5,000, well, really about 5,000 and 5,400. We're being squeezed higher by a sort of key bull market, bear market indicator I use, which is the 250 period exponential moving average, and we keep hitting that level and bouncing off it, and this last hit was no exception. So look, we're range bound, we're at the top of the range. There's two ways you can look at that. It primes us for a breakout from this current level, and we're currently trading at highs we haven't seen since about middle 2008, so really just before the you-know-what hit the fan in the GFC. If we can get through this, there's actually not a lot holding us down until 6,000. So that's another 550 points higher from here. So it's a potential 10%. Certainly from a technical perspective, if we can get through these highs, I do believe that is what's on offer. It's a very mild pullback at this point in time from those highs, and I think that's healthy. If it starts to get through some of those Fibonacci retracements, 23.6, 38, then I'll start to become a lot less confident that we'll get through. But whilst we have a shallow dip from these highs, I think investors just want to wait for that next buy signal. It'll be a big white candle. It might be a day where we start very low, so we might be down 30, 40, 50 points on the back of, say, a weaker night in the US, but we close pretty much square on the day. We even close up a few points, and that's going to be a price action signal that the money has come back in, and that will obviously take out a lot of supply in the market. In that supply vacuum, that demand can take us a lot higher. So number one, key level, if we can get through 6,000s on the cards, if we take too much of a dip from here, we could come all the way back to 5,000, and watch out for that price action signal before you get in.
So let's go to our first call, and we've got Helen from Sydney. Helen, are you there?
Good evening, gentlemen. I'm ringing about On the House.
On the House, yeah.
Ticker code OTH. They announced good results today, and yet the share price went down. I guess the whole market was down today, so I was wondering what the panel thought of that. And I know Carl said he came across on their filters Dinaco International, DNA. I was wondering whether he still thinks it's a good buy at these levels.
Thoughts on the house there, Carl?
The house, yeah. Thoughts on the house? The house isn't looking so crash hot at the moment. Look, I just think it had a great run through sort of June through to October last year, where it was one of the best stocks on the market at the time, without a doubt, looking at the relative strength. So that's comparing the performance of the stock versus the broader market. It had a big dip, and often when you get those exponential moves, they often climax with a sharp drop down. You look for anything that constitutes about a 10% drop in a couple of days, and that's usually the sign that the party's over, at least for the time being. It had one of those, and really it's been in a steady downtrend since then. The fact that it is trending down tells me that, on balance, people are looking to exit the stock into rallies if they feel that they're lucky enough to get one, and they are getting quite desperate on the downturns to sell. That doesn't look like it's going to change anytime soon. The key level, I think, is 50 cents. If it breaks below 50 cents, I think you would stop looking at this one for the immediate future. If you can hold 50 cents with a nice push in terms of price and volume, but then you might consider it from there. But otherwise, I would avoid that one for the time being, Helen. The other one Helen asked me about was DNA, which I talked about last time I was on the show, and from memory I said, look, it's had a great run. It probably will take a breather, but on the next breakthrough, 110, 115, then go for it. Coincidentally, it's taken a breather. It's gone sideways, and it's actually now just breaking through 110, 115. So I think this one's actually good to go. I don't know if I'd chase right now at this exact price around 120, but I think any pullback from 120 into probably about 110, 112 is where you want to look to buy DNA. But that one looks far better for me than OTH at this point in time.
Okay. All right, let's go to Sam from Orange. Sam, are you there?
Guys.
Fire away, mate.
Beautiful. The stock I'm calling about is eServe Global, ticker code ESV. Basically, they are a mobile payments provider, and they've had a lot of write-ups through, I think, Under the Radar report, Eureka report. Really, really technically looking great. They did a deal with MasterCard, which is basically through this mobile payment solutions. I'm just wondering if the boys know anything about this company.
Yeah, as Sam just pointed out, that they're obviously on a bit of a tear at the moment. As that chart on the screen shows us now. Carl, looking at it technically, do you think that can push much higher from these levels?
Yeah, well, I mean, I'm not the type of technical analyst that predicts tops or bottoms. It's not really my trading style. So
you go with the flow,
I'll go with the flow. I'm a trend follower. So I wouldn't say I'm more of a reactionary trader, and that might suit some people, it might not suit others. So I won't know this trend is over until I have some signs that it is over. It means I never get out at the top, I never really get in at the bottom, but my job is to try and take that chunky bit in between. And I think we're in that zone right now. I can't see anything in my charts that would suggest to me, just at this stage, that the run is over. You know, all three of my key trend timeframes look fantastic. It's outperforming the broader market. There's nothing really sinister in the candles, the price action, to tell me that things are coming to an end. So look, I'd be happy to be a buyer around here. It's one that has continuously come up my scans for the last few months. It falls beneath my liquidity filter, unfortunately, to recommend it to my clients, and that's a shame. But look, I think if, as an individual investor, you're not going to make too much of a dent, I would think, in this. So, you know, clear to go for me, actually, at this price level, and probably 150 is the next target from here.
All right, that's a sizable return.
It's about 110, so yeah, you know, 150 is not impossible.
All right, okay, let's go to Mark from Newcastle. Mark, are you there?
Yeah, hi there, guys.
G'day, how you going?
Good. Just got a question on JB Hi-Fi.
Yep.
After its little drop it's had, I'm actually in there at about $18, and just looking at probably more from a technical side of it, a buy, sell, or hold. Thanks, guys.
Carl, looked like we just saw a double top on that chart that was on the screen a little earlier. Technically, is that a good sign, bad sign, indifferent?
Bad sign.
Buy, hold, sell.
Bad sign. This one's a sell for me, and it's a fascinating chart. Look, it's not one I've seen for a while. So I love coming on the show because often somebody will call in and give me a stock I haven't seen for a while. And the reason why I haven't seen the stock for a while is I've got a scan that I run that looks for longs and a scan that looks for shorts. And for stock is in between, it won't come up, and it might not come up for months.
Sure.
So this one was definitely on the long scan for many, many months. About 6 months ago, it dropped off because it failed to meet the criteria. It's not on the short scan yet, but I'm just checking my my little parameters here. I would suggest it's days away, if not even tomorrow. It might actually come up on my scan for a short. So I'm actually pretty bearish on this one. And look, the double top is part of it. It had that exponential move up. It's had the sharp dip down, which is not the end of the world. It's what you do with that sharp dip. And it rallied. It tried to test that high, and it's failed. So that tells me that there's somebody pretty big up there is selling a bunch of stock, probably which they bought at $10. On the double bottom, perhaps. So there's a bit of supply in the market. I think the psychology from other holders turns to how much money am I going to make on JB Hi-Fi, because it was going up, to, God, if I can just get out of this, if it gets back up anywhere. So I think the psychology has changed. Certainly the chart has turned the corner. I'd be so bold as to say short on the market open tomorrow with you can run a pretty tight stop on this, I reckon, at about $20.66.
Wow, you don't get more definitive than that. Okay, all right. And as Mark said, he was in at 18, so yeah, at the current sort of levels I mentioned, it's going to be too painful getting out. No,
he's about break even here, and I think that's as good as he's going to get for a while. Target to the downside on this could be $15.
Wait for a pullback and get in at better levels.
Yeah.
Our next caller is Chris from Darwin. Chris, are you there?
Yes, I am. Good evening.
Good evening.
My question's about Dulux, which is described usually as a sound, very well-run company. As a potential investor, I'm a bit put off, though, by the high level of debt to equity. I wonder what the panel's feeling about that is.
Yeah, OK. Looking at that share price, that's the sort of chart you want to see. Has it run out of steam? Carl?
Yeah, look, I'm not the best guy to ask about debt to equity, of course, but I do have an economics degree. We did accounting 101 and so on, all that sort of stuff.
Well, that's as useful as an Astro and a motorbike, isn't it?
Look, at the end of the day, you know, it's like, I guess, your personal debt. As long as that debt is for a productive asset,
you
know, it's giving you financial benefit and utility, and as long as you can cover the interest, then it's not that bad. And I think you probably know better than me, Simon, but this whole debt to equity thing and the level of debt has become such an obsession with investors since the GFC that you didn't hear about it before. In fact, debt was good before the GFC, and then since then,
people spoke about optimal levels of debt.
That's right.
Yeah,
that's right.
Lazy balance sheets.
Yeah, lazy balance sheets.
Yeah.
And then we had the GFC, and then debt's a dirty word. And I love coming on the show. I love watching the show as well. And a lot of the fundamental guys come up, and that's almost the first thing they talk about is debt to equity. If we get into a big bull market, if we break that 54.50 on the XO and move into 6,000, I reckon debt's going to become the best thing ever again. I think the argument about debt is a lot about the psychology of the market, and maybe the wounds of the GFC are a little bit fresh in people's minds. Look, what I can comment on, because I can't comment on the other stuff, of course, is the chart. And you mentioned the words running out of steam. I think this one's running out of steam here. It's had a fantastic run. It's really flattening out here. A lot of the candles I'm seeing now are turning from lots of white candles to lots of black candles, which tells me that stock opens up on the day, maybe the market's up. And then during the day, it comes down, 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 because there's supply there. That's telling me that funds are selling this stock to realise cash to go and buy the next thing and the next thing and the next thing. Certainly not the end of the world yet. If I had it, I'd hang on to it as long as it continues to trade above about 520. If I didn't have it, I wouldn't buy it here and maybe go and find some of the other ones we've talked about tonight, like the one that was going up, whatever that was.
But just to just be clear about that, you are right. We do get a lot of fundamental analysts on this program who are very concerned about debt-to-equity ratios, and that is probably the norm in the market. But to give you an example, like Lehman Brothers, potentially most banks sort of run debt-to-equity ratios of around, or they're leveraged 10 to 1. Lehman Brothers were leveraged at one stage about 68 to 1 and went before that collapsed to 23 to 1. That's not prudent. So yes, debt can be an absolute killer, but I think most people would agree that a little bit of debt's not too bad.
Yep.
All right, let's go to Luke from Brisbane. Luke, are you there?
Yeah, g'day, Mark.
G'day.
Looking at Ramsay, it's travelled to over $50, but it has come back the last few days to 47 there with the handle.
Yeah.
What are we looking at? Is it a buying opportunity at the moment?
Yeah, that's had a great run up. Looking at that chart, hasn't it? And it's just spiked up the last couple of days. Carl, on the charts, what are you seeing there?
Look, it's a great looking chart. It's a stock we love for my Elite Traders Club, which is a group of clients who I look after, and we run two portfolios. We run a short-term portfolio, which is generally CFD trading, a lot of contact with the market. We look at the market every day, long and short. We run a long-term portfolio, which we look at just weekly charts, and that's how we make it a bit longer term. So if you're looking at the market just once a week, it's technically 5 times longer term than looking at every day. And this is one we definitely hold in the longer term portfolio. We've had a couple of bites of the cherry. I think the first swing we took from 20 to 35. Then we got in from 40 and we're out at 50. So we literally, if my clients were following my trading system, that is, they would have got out just a nudge under 50. 50 is one of those key levels that we look at, not because we think the stock's expensive there. We'll let the fundamental analysts debate that, but simply because we know a lot of people want to sell at $50.
Yeah.
So if I buy stock at 20 and now it's trading at 48, and I look upstairs, I might be thinking, well, $50 is a pretty good return. If I bought it at 25, I'm definitely looking to sell it at 50 because I'm making 100%. If I bought it a couple of weeks ago at 45, I'm probably going to sell it at 50. So if everybody's thinking 50, we want to be out, but we'll get out just before them. So we always come down a good at least 1%, I tell my clients, from the round number. So again, if they follow the system, 49.49, they should have taken their profit, which is looking pretty good right now. I don't think it's the end of the trend. I still think there's probably more in this, but we'd be looking for a price action signal, so a reversal, and then a rally off about 45, I reckon, which is going to be the long-term support level.
And we've got Mark from Buderim. Mark, a regular, how are you?
Evening, I'm very well, thanks. Yourself?
I'm very well indeed.
That's the way. Got a couple of questions about the financial sector.
Yep.
Platinum Asset Management and Bank of Queensland, I've got those guys. They're doing quite well for me. Just wondering, short to long term, whether they're a hold or a sell.
Okay. Yeah, obviously Platinum has got some very good management there, and Bank of Queensland has been on a tear over the last few months or so. Carl, Platinum and BOQ.
Bank of Queensland, that's right. I think Platinum's my pick of the two there, and I'm pretty sure Mark's got them both. So I guess he's looking for guidance as to whether to hang on. I'd definitely hang on to Platinum. I think that one is in a fantastic trend. It's still outperforming the market by quite a wide margin, actually, in all three of my key timeframes. The candlesticks look good, the price action looks good. Yes, it's having a little bit of a pullback here from 750, but the next big support point, probably around about 7. And again, looking for any bounce off there would be the way to potentially even add to this position. There's not a lot holding it down really until it gets to $10. Another one of those big round numbers. I know The post-float highs were around about 9, so it's getting back up towards there. But yeah, definitely hang on to Platinum. Bank of Queensland, I'm not as keen on. It's a bit like that JB Hi-Fi chart, where it's had a really good run. It's had the dip, the second go to get back through that high, and it's failed. It's failed in a pretty bad way. It's taken out a key support level there at about 11.50, and it's now looking like making a third lower peak. You can see it from that chart there. So, look, it's not a total end of the world here. I think JB Hi-Fi is far further along in terms of being the end of the world, but I'd be probably putting on a stop loss. I think, maybe that's one way to run it. If it keeps going up, you've still got all the upside, but if it comes down, at least you can get your money back and go and look for something.
I think you keep an eye on the unemployment rate and also housing market, and that'll give you some indication as to whether it's going to run again or not.
Well, interesting. I mean, those themes we were talking in the break really relate back to JB Hi-Fi as well. So, I kind of look at JB Hi-Fi as a bit of the canary in the mine shaft as well. If that starts to go down, what does it say about, the local economy as well?
Spending patterns. All right, let's go to Eric from Sydney. Eric, you there?
Yes, thanks, Mark, for taking my call. Look, I'd like to ask Carl, look, mate, about 2.5 months ago, rang about car sales. There was a big volume date around about the 9.20 mark. I said I'd like to buy quality at a reasonable price. They went back to around about the $10 mark, then down to about the $8.80 mark. Carl made the comment it could have gone the way of Newcrest. You had Gary Stone with his big shorts, you know what I mean? I hope he did cover. Just thoughts on that, fellas. Thanks very much.
So have you got in, Eric, or...? Oh, we've lost Eric. OK, let's see if we get the chart up there, Carl. Let's go straight to you. Caesar, you're on the hot seat.
Yeah, it looks like it.
Car sales.
No, I distinctly remember that call, and I distinctly remember the comment value on sale, which I think is one of those fundamental analysis tenets, isn't it? And everybody's got a different style, and I think that's what makes the market work, doesn't it, at the end of the day? Not if everybody did the same thing, there wouldn't be a market. I think last time I was on, it was looking pretty bearish, and look, it did go down to about 8.50. I think they had a great result, or better than expected, and it's popped back up into the 10s. Hasn't turned the trends around for me. It's more neutral than anything else. I don't think it's bearish. It's certainly not bullish. If I didn't have the stock, I wouldn't be looking to buy it here. If I did have the stock, I'd be happy to hold on. But probably, again, would set a stop loss maybe just below 10, just to protect my capital. I guess, if you don't have a stop loss, by definition, you're risking 100% of your capital. But if you put a stop loss 5% away, you've at least going to get 95% back. That's the way I look at it. So, I think if you've got it, hang on to it, use a stop loss. I don't know if Eric's that way inclined, but that's how I would tackle this one.
All right, OK. Let's go straight to John from Perth. John, are you there?
Yes, thank you. Good evening.
Good evening.
Could I please have the panel's thoughts on Northern Star?
Northern Star, I saw today, John, had a bit of a big fall. I didn't see the reason for that. Was back on the back of a profit report or something? We've lost John. OK. But that you can't see on that chart. But at one stage it was down almost 8%, but it either bounced back quite dramatically. Carl, what are your thoughts on Northern Star?
Yeah, well, to answer your question, they did release their half-yearly profit today and clearly missed expectations. The stock, as you can see there on the chart, was rising into that report. And that's, I wouldn't say that's common. It's not uncommon, though, to see a stock rally into a report. Report price, the stock price for perfection, expecting a great report, not as good as people thought, and you get a bit of a sell-off. I mean, I think that the trend is still pretty strong there. If I had the stock, I don't think I'd be turfing it out just yet. It's a pretty strong sell signal, mind you, today, but I think as long as it can hold above that 110 level, then it should still be OK. But, yes, a pretty big sell signal today, but 110, I think, is the key level there.
OK, let's go to Bernie from the Gold Coast. Bernie, you're there.
Yes, mine's for a technical. Just in regards to CSR, a long-term shareholder, and we're starting to get up to a price where I'm almost ready to pull back what I started with in the beginning. I've taken a small position away from that and still hold a little bit of the stock. I'm just wondering, is the trend still our friend, or are we getting a bit toppy at these levels, please?
Well, Bernie, I reckon that chart I can see on the screen now, the trend has definitely been your friend. Will it remain so? Carl, over to you.
I hope so. I hope so. I've got my clients into this for our short-term portfolio. We bought it on that last move through 3. It went up to 325, didn't quite hit our profit targets, and we've still got it. I actually set a hard stop today at 304 from memory. So now that I've told every fund manager in Australia where my stop loss is. But
no secrets here, Carl.
I do that as a sacrifice to let, sorry, I've forgotten the caller's name already, know where I think, the stop level is. Look, it had an interesting day today, traded lower in the morning. It's one of those days I think I talked about you want to see on the broader market. You want to see it trade lower in the morning and then close higher in the afternoon. Often that tells you that there's supply exhaustion. Everybody's gotten out. The big money's come back in and pushed it back up. The money that got out now thinks, hey, actually, I should get back in, and you can go again. So there's some hope there. I think, that 3 level is pretty key. We've basically just tried that stop to break even, so we don't really mind one way or the other. The question was, is it getting toppy? Should I hold? Yeah, look, I think hold. But again, manage your risk, understand what your risk is. It sounds like the caller has been holding it for a very long time. He said, I'm just getting back where I'm above water. Don't do that again, whatever you do. Don't hold a stock for years and years and years just to get back to break even. So many wonderful opportunities out there in the market. Take a quick hit if you have to. I guess this will be a break even, and go and find something better. Put a stop loss on. Otherwise, hold it, and your upside is unlimited.
Let's go to Tim from Coffs Harbour. Tim, are you there?
Yes, Mark. Thanks for the call.
You're welcome.
Just ask Carl and Simon on their views on mineral resources. I've been holding for a while now and been chopping and changing, just wondering what they thought might be the view on short and mid-term.
Gee, it looks like you've had a bit of a rough ride there, Tim, as well.
Yes.
Yeah, exactly. And I think that Tim's not alone there. There's been many investors in other resource companies that have also gone through the good times, the bad times, Carl.
Yep.
What do you think?
Integrated Australian-based mining services processing company. It's interesting they've actually done that well, given the sector they're in. So, mining services. I'd have to say they are one of the best performing mining services stocks probably in the last 12 months, and that's impressive in itself. I think strength tends to point towards more strength. I don't think this one looks terrible. I just don't think it's that exciting either. Certainly it's had a pretty good run into 12. I think 12 is a bit of a key level because you can see that old long-term peak back on the left-hand side of the screen there, and I think that's what's causing it to pause around here. The last caller, I think you said his name was Bernie, this concept of buying something and then waiting for years until you break even.
Yeah.
And that often plays out in the market exactly like what we're seeing here. So the people who are buying it on that rally thinking, oh, it's going to go up to $20 because maybe at that time mining services was a good thing, they've been holding it for years. And they're almost back to break even. So a lot, not all of them, but many of them will say, hey, wait a minute, I'm getting my money back here and I might sell some. And that creates supply in the market. And when supply meets demand, prices go sideways. So that's why we often see these stagnation points at those old long-term peaks. It's where we are now. I can't buy it right here. If you've got it, I keep saying this, just put a stop loss on it, and you've got all the upside in the world, but if it doesn't perform, you get out and go find something that is really exciting.
Sure. All right. Let's go to an email now, and Ray writes, thanks for your program. You're welcome. Do you like the reject shop? It's fallen lately. Would you sell or hold? Thanks, Ray. Nice and succinct. We like the nice and succinct emails. Sell or hold? And no mention of buy there.
Buy, yeah.
So let's see if we can get the chart up and go to Carl on the reject shop. That's me. It's not the chart. There it is. Oh, wow.
Yeah,
okay.
Big drop.
I can see why I didn't put buy. Well, I mean, some people would probably say, is it time to buy now that's come off so much cheaper?
Yep. No. Not me, no. Yes, some people would say that, but not me, no.
Okay.
It's, totally at odds with my philosophy. And, yeah, I know a lot of people like to try and buy the bottom. I just think there's so much risk inherent in that. Sometimes, don't get me wrong, sometimes you will get it and there might be 20, 30% rally. But I think if you look back at every time you try to pick the bottom, you'll probably find, more often than not, didn't quite turn out as you'd hoped. So, no, I definitely can't advocate buying it. The question was, would you sell it or hold it? No, I think you wouldn't hold it either. I think I'd be getting out right now. I think there's too much risk to the downside. The only saving grace is that it might bounce at 10 simply because some people might go, hey, it wasn't that long ago, it was nearly 20, now it's 10. That looks cheap, I'll go buy some. Creates demand in the market, you might get a little bit of a bounce. It looks really bearish here. Stay out. If you don't have it, if you do have it, I'd still suggest get out.
That and the fact that it's bounced off this sort of level before could, in ARMA, if you're able to get back up.
Yeah, but I mean, you mentioned the bounce, but look at the bounce is really terrible. I mean, things that are gonna rally, things that will come back are the ones that bounce sharply when they drop. You know, you get that V-shaped bounce. That tells you, hey, there is actually some demand down there, or, just as importantly, the shorts are covering back. You know, the shorts create demand as well. So often it's that, and often you can't rally until the shorts are done with it.
Sure.
You know, whether you like them or you hate them, they're in the market. You need to know how to read them and play with them. So the V-shaped rally tells you the shorts are covering back and the value guys are buying. That drop and that flat movement tells you nobody's buying it. In fact, the market is still skewed to the supply side. People aren't thinking it's cheap. On the contrary, they still think it's expensive, and that's why it hasn't bounced. And now it's cracking. This one looks really scary for me.
Let's go straight to our next caller, and we have Barry from Melbourne. Barry, are you there?
Yep, yeah, thanks.
Fire away.
Yeah, guys. I've got 6 shares that I bought for about $6.50 about a year and a half ago. Obviously, they've gone up a lot recently. And I guess my question is, should I hang on to them and hope for more? Should I get rid of them? And if I get rid of them, you know, what kind of areas should I be looking at to reinvest in?
Okay, all right. Well, Barry's obviously had a good run on those shares since 6.5. I noticed today that contrary to the rest of the index, the SEEK were up almost 2%. Can the run continue, Carl?
Well, that's a really tough one. It's had a really good run up here. And look, it's one we hold again in that long-term portfolio. You had that big profit upgrade, had a massive rally from there, big gap, in fact. Again, you know, we do play those round numbers, so most of my clients would have taken their profits pretty much when it came back on that result, and I don't think I'd have too many clients in it here. So I'm a little bit out of practice in terms of being able to tell you what to do with it. Look, I think it's had a tremendous run. There's nothing actually on the chart which would tell me that that run wouldn't continue, but logic would suggest that just from a mean reversion perspective, that it probably is closer to the top of this run than the bottom. I think, look, if you've had such a great return from, you know, really $12 just a couple of weeks ago to 17, surely you must be able to find something that is closer to the start of its run than maybe this one is to the end of its run. To be honest, from a technical perspective, I can't give you a sell signal. It's just not there, but logic suggests maybe there's a better opportunity elsewhere.
Logic? I thought you were a student of the charts and that was it. Let's go to Richard from Jura Beach. Richard, are you there?
Yeah, good evening, gentlemen.
Good evening.
A question about Capital Health, CAJ. I rang a couple of months ago and Carl actually suggested this stock was trading in the mid-40s. He said if it broke above 50 to buy more, if it got below 40, get out, and it did get below 40 and I got out. It's now cranked up above 50 on some reasonable volume. So just wondering what the panel's view is on CAJ.
Okay, let's go to Carl first off. Well, I guess you did make a call there, Carl.
No, look, I mean, we did pretty much the same thing. So we had it, we wrote it up from the 30s, I think, and I think we did get it out around those 40s. And to be honest, I never got back into it. It just didn't give me the right buy signals. So we did much the same as Richard did.
And now it's cracked through 50. You think it's going to go higher?
Not in the short term. No, I think it's had a pretty good run into 60. I'm seeing some significant signals here on my charts in terms of what the price is doing. So I talked about earlier on about how when you want to see something going up, you want to see that early morning sell-off and then the late afternoon rally. Here, more of the candles are looking like early morning rallies followed by late afternoon sell-offs. So that tells me that somebody's taking profits up there. You know, you can only get so many of those days before the weaker hands start to say, well, this one ain't going any higher, and they start to sell as well, and then you get a full-blown pullback from here. And I think that we're early stages of that. So I think it will continue to fall from these levels, but that old 50 level, which was the old resistance point, now should act as a support point. So you might find the opportunity to pick it up around there. I just don't think it's one I want to be actively trading at this point in time.
We'll go straight to our next caller, and we have Brendan from Sydney. Brendan, are you there?
Yeah, I'm here.
Hi, fire away.
Okay, I'm interested to inquire about Beach Petroleum and also Cinex, so BPT and SXY.
Okay, let's go straight to Carl on this one, because obviously the price of oil back above $100 a barrel.
Yep.
As in West Texas Intermediate, and also Brent back above, I think, 110. Any outlook for Beach from that chart?
Yeah, it looks good, not great. You know, I think if you had it, I'd hang on to it. If I didn't have it, I think there are better things out there at this point in time. Certainly there's a very interesting the beginnings of an uptrend here, but it's just too early stages for me to be able to come in and tell my clients to buy it at this stage. So
sure.
I don't know what the caller's position is. Again, those words again, stop loss. Stop loss at about 148 limits your risk to the downside, and because it's been a serial underperformer for years. So just don't take that risk that you hold it for another few years and it doesn't do anything. So 148 stop, and your upside is open-ended. If it goes to 150 a barrel, you're laughing.
And while you're hot, what about Cenex?
Oh, Cenex, SXY. Similar sort of story. I'd definitely go beach over this one. No, I can't buy Cenex, and no, definitely beach over Cenex at this time.
Okay, beach over Cenex for Carl. All right, let's go to Brian from the Gold Coast. Brian, are you there?
Yes, Mark. Thanks for taking my call. Good evening to you and the panel. I've got. I'm looking at Leighton LEI for a 3-year period, and if you've got time, Cockatoo Coal COK for a 5-year period. Could you comment on that?
Sure, no problem. Looking at that chart there, Carl didn't actually tell us too much.
Yeah.
What are your thoughts on Leighton at the moment?
Well, look, it's bottom of the range. I mean, the question was about where is it going to be in 3 years, which is a pretty curly question. But look, I think it's a bit of a punt here. That's the way I would classify it. It's not something I would tell somebody who's chasing a low risk entry into a stock to go after. If you are that way inclined, you're happy to take what I think is a considerable risk on this. I do think we have probably seen the lows for this for the time being. So if you go into it eyes wide open and tackle it from that perspective, I don't mind it.
All right. Okay. Well, that's all we have time for today. Thank you so much to our guests, Carl Capolingua from the Australian Stock Report and Simon Guzowski from Investment Partners, and to you, our viewers, for all of your calls and emails. Till next time, I'm Mark McCarthy. Have a good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.